All right, guys. Yeah, thanks. Really happy to have Chris Vermeulen back with us from TheTechnicalTraders.com to talk a little bit about the markets as we wrap up the week. Back in negative territory, interestingly, as we've been kind of seeing this market try to move higher throughout the morning, but continues to fail here. So obviously, big jobs number out this morning. We'll touch on that as well with Chris. There he is. Chris, good morning. First off, I mean, it's been another busy week. How are things?
Yeah. Good morning, Brendan. Yeah, it's another wild week, no doubt about it.
An interesting session so far today as well. Obviously, the big jobs number out this morning. I mean, I think everyone was expecting a huge number, regardless of the way it came. But the estimate was a little bit, short, I think, of what was the actual number. So they were expecting, obviously, 100,000, comes out much bigger than that, 700 plus thousand. First off, how much do you pay attention to a number like that when you, approach the market on a day like today?
I don't follow too much to the economics. I mostly focus on the technicals of the charts. But, I mean, you have to be really cautious trading when you've got big data coming out like that. And, of course, it's going to cause some pretty wild market moves, usually as it rolls out through the day. And right now, I mean, we've got headline news coming out every few hours or something in the afternoon meetings at 2 o'clock. So really all the data coming out, economic news now is something you got to watch because it's really, we're looking at huge numbers and they move the market. So I don't try to predict them by any means. I just know I don't want to be in some type of big position if you're short-term trading around some of that data.
Yeah, especially around, this type of environment, a very headline-driven type of market. Volatility, not as crazy this week. We've seen a little bit more orderly trade this week than the week before or even 2 weeks ago. Let's jump into some interesting charts here that you sent us. Crude oil, first off. I mean, a huge move to the downside, obviously. We've talked about that on the show quite a bit. But tell us how you've been approaching oil this week and what you're seeing on the charts and maybe going forward.
Yeah, oil's been in that huge downtrend. And we're at a point now where it's down so far. We're starting to see volatility on the charts where it's trying to find a bottom. Yesterday, there was news coming out. China was starting to suck up inventory. The Saudis and Russia might ease off a little bit. It created this huge pop. Oil was already up about 10% yesterday. And then the news came out with Trump about the Saudis and Russia. And then the market jumped another 15%. And today it's up. It tagged the upper level that I drew on the chart there, which was 28 this morning. Since then, it's been pulling right back again today. I like oil in this range. The longer it trades in this blue box, the more potential power there is when it breaks out. So I'm really excited. I don't care which way it breaks. Once it does, though, we should see a really nice move in either direction. So I like to follow that. And I do feel as though we're going to see crude move to the upside simply because the leading indicators like the energy stocks, XLE sector, and even the Canadian dollar, which is very tied to crude oil prices and energy stocks, they're all showing bullish signs and outperforming crude. And that's a leading sign.
Yeah, biggest intraday move ever for crude oil yesterday, which was pretty impressive to witness. Maybe talk a little bit about your time frame that you're looking at, Chris. If you see, a move like that, 20+% on crude yesterday, is it something that you're kind of willing to jump in and try and catch a little bit of that move and then maybe hold for 2 or 3 days? Or are you looking still at that, overall picture and higher time frame?
Right now, for me, I'm swing trading, so I'm not trying to catch anything inside that blue box. That is a great day trading range. You get in beautiful, powerful moves in the day. What I'm looking for are simply breakouts of those ranges. So if we get a break to the upside and the market rallies, I want to jump right in and catch that move because I think there's a quick 10, 15, even more % upside. If it breaks to the downside as a swing trade, you jump on and you can play an inverse ETF on crude oil, which will rise in value as stocks fall or the commodity falls. So I'm looking for that breakout. When it happens, I think it's going to be quick. It'll be a 2 or 3 day move, and then it's over. It's very powerful the way these markets are moving, and this type of breakout with the amount of short, especially if it's a break to the upside, there's so much short sellers in there that when they cover, it's going to create this massive short covering rally, and it could be much bigger than 10 or 15%.
Yeah, you mentioned kind of 2 or 3 days. Is that something that you would look at to the upside or either direction as far as the time frame goes?
Yeah, I'd be looking either direction. It's just going to be a really sharp, powerful move, and it'll only last a couple of days. That's it. Doesn't matter which way.
It's such a dramatic move, obviously off the highs from a month or so ago. I mean, in your opinion, we're obviously speculating here, but in your opinion, do we get a test of the lows that we put in, or is it something that needs to kind of digest first, maybe test lower and then get an eventual move higher?
I'd like to see crude oil go back down and test 19 again to the $20 range, maybe even go lower. I mean, there's potential that if it breaks down, we're going down to the $17 per barrel. To me, that would be a great opportunity. I think it would be a knee-jerk reaction, simply because the long-term chart zooming out several months, actually going back using a year-long chart, shows that that 17 to 14 range could be very significant. And from there, we could put in a bottom that stays in for years. And so I like the idea of a double dip, but in reality, I just need a breakout and I need some follow through for a couple of days just to catch that trade. That's all I'm looking for. Not really going for the long-term kind of view.
Let's move over to how we can maybe, put this or trade on if people are watching along at home as well. You mentioned a lot of ETFs, some of the inverse ones moving higher if the price is going down. Let's have a look at the ETFs that we can maybe put a trade on and join you in this thought.
Yeah, so the ETF that I like for this is the energy sector stocks, which is the XLE. Carries a basket of energy companies, and more or less, I look at the energy sector stocks as a leading indicator. Much like gold miners typically lead the price of gold, the energy stocks do the same thing. So the energy stocks have had a nice rally. You can see on that chart. They've traded sideways for about a week. They're testing the highs now, and that is a much stronger performance than what crude oil is doing. Crude oil is still in that lower range at the bottom of the chart, whereas energy stocks have already popped and built this bull flag. So I'm looking for an upward extension, and the XLE ETF is a great way for anyone to be able to jump in and play that move.
Something that is closely then, kind of correlated with the oil markets and energy names in general. Obviously, our Canadian dollar kind of heavily tied to the oil markets. What are you seeing in the Canadian dollar at this point?
Yeah, the Canadian dollar, I mean, it's just completely tumbled. I mean, it's as a Canadian, to buy anything American now is extremely expensive. It was $1.45 exchange about a week ago. So, I mean, we're talking a huge move. And if you look at the chart there, the Canadian dollar has fallen just like crude oil, energy stocks. It has a relationship very similar to the energy stocks, though. It's had a nice rally in the last couple of weeks. It's formed that nice bull flag in that falling channel. And that pattern is showing signs that we should see a continuation move to the upside. So that is a bullish sign. I think, you can play the dollar to the upside, the energy sector ETF. I think both of those are really kind of pointing to crude oil is putting in a bottom. Maybe it dips down and hits that $20 level again on crude. But at this point, it looks like crude has put in a bottom, and we're just waiting for an upside break.
Chris, talk us through what we're looking at maybe on that chart, guys. If we can go back to that chart real quick at the bottom there. Talk us through some of the indicators you're looking at and how you approach, the currency market.
Right, so that bottom indicator is the COT data, and I just pulled this chart off of FinViz. I don't really follow the COT data too much, to be honest. That's a lagging indicator. That's about 2 weeks. So this really isn't my chart. This is off FinViz, but I typically like to follow volume, price action, and then I try and find whatever asset class I'm looking at. There's usually some type of leading indicator for that asset, and for us, that's the energy sector stocks and the Canadian dollar here. So that COT data is really just the commitment of traders of positions of large cap traders and small cap traders and commercial hedges. And there's mixed reviews on how to read that. I don't really use that too much.
Obviously, energy sector related ETFs, both traded in the U.S. and also here in Canada on the TSX. Are there any Canadian ETFs that you're having a look at this point?
I don't really follow the Canadian ETFs too much. I follow strictly in the U.S. equities at this point, just because the U.S. dollar is in a bull market. I'd rather have all my trading capital in the U.S. dollar than in the Canadian. There are ETFs that follow crude oil, the energy sector stocks. I don't remember the symbol. I think it's XEG or something like that. But all the signals and trades that I give out to our subscribers, there are the same ones in the Canadian TSX as well. And I share those. I have a list of them all. I just focus on the U.S. and the commodity futures for the real raw price. And then we can trade RIDEX or Canadian ETFs, whatever you want, off that data.
Yeah, and some of these names obviously giving you all kinds of opportunities this week. I mean, we're seeing these little teeny tiny energy names going crazy today, giving you, 3, 4, 5% moves just intraday on these, crazy moves in crude oil. Let's jump out to the overall market here. Chris, give us your thoughts on the S&P. A little bit of a consolidation, I guess, still. Which direction do you think we end up heading overall?
Sure. Yeah. Well, the SP 500 is building a bullish pattern, much like the energy sector stocks. It's had a nice bounce. It's been flagging sideways for a few days. The upside target, if we can get some traction here, this is a very similar trading pattern in terms of the direction, which is to the upside. And I think we've got a pretty good chance of it having a big rally. And of course, that would be the ideal setup. But I mean, no one really knows what's going to happen. That's why you have to just follow price. You've got to have really strict trading rules and position management because you don't know which way it's going to go. But the chart right now is screaming that it wants to rally and pop. And you can see the upside target there on the SP 500. So I'm really hoping we're going to get up there. I think we're really close to getting long the SP 500 for a move, or any index for that matter. It could be TSX or the NASDAQ. But overall, the pattern is bullish. And we just need to see if we're going to do that double dip. At which point, if it starts to break down from here, I'm actually not really looking to get involved in the market. I'm going to wait for a different type of setup in terms of how to play it. Ideally, I'm looking for a break to the upside, and then from there, we'll be getting long the equities.
You mentioned a break to the downside here would kind of, make you go hands off a little bit at the time being. What is it specifically you would need to see to kind of classify it to you as a break to the downside? Maybe that 2,400 level being broken once again?
Yeah, well, right now it's in a little bit of a sideways range the last week. If it breaks below those, I think we're going to instantly drop down to the lows we saw a couple weeks ago. The question is, do we bounce off that? And if we start to pierce through that and sell off, and we see bonds start to go ballistic, we see precious metals and other safe havens actually start to sell off. If we see that type of market, then I'm going to be really worried, because that means everyone is in an extreme fear situation again, where they literally will liquidate everything. We see gold fall, we see bonds fall. I mean, the last time we saw the market start a leg down, bonds pulled back 15% from the high, gold pulled back. When there's mass panic, and I think everyone's sitting here waiting to hit that sell button, if it starts to make new lows from here, I think we're going to see another big wave, and I don't think there is going to be a safe haven. I think you need to either be short the index or an inverse ETF, which will rise as the stocks fall, or you need to just be in cash. And we've been in cash for quite a while. We're sitting at new account highs, and we've been watching this collapse. We played the rally in bonds when this collapse started, and we've been just sidestepping and just watching it until we get some type of safer trade set up to the upside. Just the volatility is too wild right now for swing trading. If you want to be conservative and protect your capital.
Yeah, unprecedented times, as we've been saying, obviously, as far as the outbreak is concerned, virus-related news coming out hourly almost affecting these markets. So is it something that, I mean, obviously we're speculating once again, but what do we need to kind of hear, I guess, as far as, improvements in these cases, maybe improvements in numbers that'll maybe lead you in the direction of the upside for the market, or is it something you're just completely ignoring and playing the technicals?
No, the virus has got a huge role in what's going on. It doesn't matter what the Fed does and how much money they dump in. The problem is this isn't like a normal bear market. Everyone is selling not because they're scared of lower prices, obviously, but people are actually scared for their lives. This is a serious matter. And until there's a place in the United States that say, hey, we've actually contained it, things are actually declining and they've got control of it, even in just one city would be a great sign. That would be the starting point. But the fear is you've got wave 2, you've got wave 3. This could drag out really, really long, and that's the scary part. And the markets are just waiting. They're like, is there going to be some containment in the market in any city? And if there isn't one soon, I think we're going to see the market break down, continue to sell off, unfortunately, because there is no light at the end of the tunnel. All of us are just walking through the dark, trying to figure out what's going on with the virus. And eventually we're going to give up going, this is bad. And people are going to start selling stuff again. So that's my concern. I hope we find some type of containment and it shows positive signs somewhere. and that's going to help the market. That'll be huge. Once that kicks in, I think we'll see a massive rally, at least a relief rally at this point.
Yeah, no, you raised some great points. As traders, we tend to look at what has happened in the past and then project what might happen in the future when we put on trades. But something like this obviously has never been dealt with before, especially at the market level. So we'll leave it at that. Chris Vermeulen, why don't you give everyone your contact information, social media accounts as well, if people want more information.
Sure, yeah, you can follow me at TheTechnicalTraders.com. And I've got a Twitter page at TheTechTrader. And there I provide my daily market analysis before the market opens and tell you what should happen, what to look for today and over the next week, so we can kind of navigate these markets with the least amount of emotions possible. Because once emotions take hold, trading becomes extremely difficult if you don't know what's going on. Chris
Vermeulen from the Technical Traders. A pleasure, sir. Stay well. We'll speak to you again soon.
You too. Take care, Brendan.
There we go, guys. Great information, as always, from Chris there. Talking a little bit about a higher time frame. Obviously, we tend to focus on much smaller time frames, but it's good to start on the higher time frame and kind of work your way down to find the opportunities on an intraday basis. So go check out the Technical Traders. Great information on their website. Let's go back to the guys.